Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of Kansas City and Minneapolis wheat markets. I'll start with Kansas City wheat. Not as clear an action here as in Chicago wheat, but similar. This time the base of the action was not a key reversal up or outside day. Rather, it was the market heading into that maelstrom of support below, stretching from 1024 downwards, that caused the market to halt its decline and gap higher just the once 3 weeks ago. Prices then rose up through the recent 50% Fibonacci line, 1146, which was surprising given how that had been a brick wall overhead back in mid-March. It then started to fall at the recent 61.8% Fibonacci line at 1183. And head back lower this week. However, the move was, shall we say, limited, as prices barely managed to get below the 50% Fibonacci line before we saw the first reactive move back up today. Overall, the market is still within the early February to late March bullish shift pitchfork, in between the middle time overhead, currently 1310, and the lower time below, currently 1105. I'm concerned a little by the acute nature of this bullish pitchfork, so I would keep a wary eye on the lower time and it being tested possibly sometime soon. One other quick point: if this market does not manage to maintain the 50% Fibonacci line or the rising lower time just below, then I'm quite prepared to draw my first bearish Andrews or bearish shift pitchfork here for quite a while. This one answers fewer questions than Chicago, but also this one asks fewer questions than Chicago, but also supplies fewer answers. Minneapolis wheat. Please ignore the color change in the labeling. It's just my charting system playing silly buggers. There is no special significance in the colors. Okay, so I'm very pleased to see that the March 2021 to January 2022 bullish Andrews pitchfork is here, still alive, well, and pointing the bullish direction of this market. The latest move higher was created from the double bottom formed over March, which after a lot of hesitating, toing and froing, and in one case to the fifth countering degree, saw prices move higher. The market is now running along the middle time, currently 1159 of the bullish Andrews pitchfork, having failed to make a new high as yet after early March's effort. There is inconclusive resistance from the April 2008 high at 1166 and really nothing of note of support until the March highs in the 1114, 1115 area. I'm not as tempted here as I have been elsewhere to draw a bearish pitchfork for the March to date action, but it is prudent to be reminded of it nevertheless. So until another pattern emerges, follow the bullish Andrews pitchfork and the middle time especially. Thank you for listening. This weekly broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. Here comes the final bit.